All right, good morning. Today is August 10th, 2022, and I'm back with another edition of the weekly live show. You know, some of you may remember years past when we used to do what we called a radio show. Remember that? Um, I'm going to say 15 years ago, 18 years ago. I don't even remember. I don't know how I'd figure it out, but anyway, back in the day, you guys probably remember Doug and I and Jeffrey used to do a radio show on, I think it was Wednesday nights or something. Those were much different times. And interestingly enough, everybody's heard the recent phenomena is a podcast. And so I don't know, is this called a podcast? I'm kind of old school since we've been doing this for so long that we always called it a show. And so, yeah, I mean, we kind of, I'm going to say 6, 7 years ago, we transitioned from that late night radio show to actually doing a live stream, right? We had something called live stream, which I guess got bought out by Vimeo or something like that. But yeah, it's a similar sort of thing. We turned our radio show that we've been doing for years and years into a video show where we could go through charts and that type of thing. And then so I mean here we are all this time later, and I'm pretty much on my own doing this. Based on sort of the time of it and what everybody's got going on. So, anyway, yeah, it's amazing. So, I think that people refer to these as podcasts, which it's kind of funny. It's almost there's a lot of jokes going around. Everybody's got a podcast these days and this and that. But man, we've been doing this a very, very long time. And so, back in the day, it used to be a lot of fun when we had several of us and we'd have a guest on and we'd talk about the market. Things have changed a lot over the years. The market's changed a lot, the behavior of the market, just everything in general. But I still come on here and every Wednesday and look through a few charts, give a few ideas, talk about what's going on. Speaking of which, so this is the big deal today. The big deal today, and this chart is updated as of this morning, right? And so everybody was waiting for the CPI number. Yesterday, the market was like it was one of the dullest days I think I've seen all year, which is to be expected because typically August is a really dull month. I know it's like July was July had a lot going on. The market's been a lot more volatile and a lot more crazy this year than many past years, but July was pretty volatile. Actually the whole year's been pretty volatile, but yesterday was typical August day, and schools around here start today, I believe, and so it's back to school and it's the summer doldrums and all that, but yesterday's market action was just crazy. I mean, I left I left around lunchtime and didn't come back for a couple hours, and the market was in the exact same spot like 2.5 hours later than when I left. And so, but this morning, lot going on today. So everybody was waiting for the inflation, right? The CPI. And so this is the headline CPI here, um, which we know is a pretty big deal, right? When we talk about this every week, the Fed pretended there was no inflation, and then, due to the pandemic and all that good stuff, the inflation rate started creeping up, and then it got out of control, right? I mean, this is where it started getting out of control. To me, anything over 5% inflation is pretty bad. And you've seen that at the grocery store, right? It's literally every time I go to a store, I see the price of stuff that I typically buy. The price has gone up. And I mean, it's like a weekly thing now. It used to be, every now and then you'd be like, oh man, the price of this went up, or and then of course there's the whole shrinkflation thing where we all know the packaging keeps getting smaller and that. But anyway, lately it's like I'd say, this whole year, we're in the eighth month of the year, but I would say just about all year long, you've been seeing this. And so the funny thing about today is that the consensus inflation, the consensus for the headline CPI rate of inflation was 8.7. It came in at 8.5, and the S&P futures jumped like 60 points, in 5 minutes, right? So everything repriced. I won't say everything, but the market repriced based on the idea that lower than expected inflation data might mean that the Fed is going to be less aggressive, and so maybe they'll only hike 50 basis points instead of 75. And so, I mean, the market's nuts. It really is crazy how all this stuff works. The funny thing is, if the expectation was 8.3, then, inflation, the CPI would have come in above expectations, and that would have been bad news. But the fact that it was, 0.2% below what the expectation was, the market took that as a signal. And, the funny thing is that everybody keeps talking about this Fed pivot, right? Meaning that I guess the Fed is going to, either not hike as much or as fast as originally anticipated, or they're gonna stop hiking, earlier than expected, but these Fed speakers, they keep. There was one just this past week. There's been a few, lots of them. They never shut up. But these Fed speakers, I mean, they've come on and I mean, they've told the market participants that, first of all, Powell said that they need to see, a long string of inflation coming down towards their 2% goal. And I think it was Daly or something that just this past week said that that they're not going to slow down. So they're telling the market. Of course, what they say and what they do are completely two different things. But they're telling the market that, hey, they're still going to raise in September. They're going to raise in December, and then I guess we'll see what happens then. Going into the new year, but uh, they still pretend to be extremely hawkish. And here's the funny thing is that 8.5% year over year inflation is completely unacceptable, right? It's a terrible number, and it's probably understated anyway. I read an article yesterday. I stumbled across this article. Hostess Brands, like the CEO, when they announced earnings, said that their inflation rate, I guess their cost of doing business, was up 20% year over year. So, but anyway, everybody's inflation rate is a little bit different, I suppose, depending on what it is that they buy. And the funny thing is that, I mean, not the last month, like June's print, 9.1% was just astronomical. I mean, it's just astronomical. And so, the thing about inflation is it compounds, right? And so, hey, even at 5%, or 6%. I mean, if this thing like slowly comes down, um, it's still going to be terrible because the price of all that stuff that you buy that's more expensive now, just because the inflation rate comes down, that doesn't mean that the price of stuff you buy is going to come down. But like I said a while back, the big thing was the price of gas. So I mean, it's a it's a strange thing. So the price of oil is down like what, like 25% from the highs, something like that. But it's still a lot higher than it was a couple of years ago. And so it's kind of like, hey, there's just a lot of moving parts. But anyway, 8.5% inflation is abominable. And It's probably understated for one thing. I mean, I guess it just depends on what you buy. And so if you dig into the inflation numbers, and it's always been like that. I mean, a lot of economics is basically, it pretends to be data, but I can tell you if I go to the store today, which I may go later today, and buy some stuff that I normally buy, some of it's likely to be, 10% higher than it was, 10%, it's likely to be, 20% higher than it was a year ago, right? So, and another funny thing is the prices of, consumer items and that. One thing that's really interesting to me is I drink Coke, right? I buy 2 liter Coke bottles, and I don't drink a lot of it, but it's one of the things that I always have a 2 liter Coke in my refrigerator. And man, the price can just vary drastically from location to location, like anything, depending on where you buy it at. And funny thing is that not that long ago, a couple of months ago, in that it was up to like two something, like 216, 224, something crazy like that. And now it's down to, at Walmart anyway, which is the closest store to me. It's down to like $1.48, which seems reasonable. And so that's I don't know. Did they raise the price going into the summer? It's nice to see prices come down, but that's sort of a rare thing because the price of a lot of other stuff that I buy has gone up and it's stayed up, and I don't feel like consumer prices at the stores and the grocery stores are actually gonna come down. And so here's the funny thing is like you got this inflation rate, and obviously everybody's been raising prices on everything, and then as this comes down, all that means is that maybe they won't raise prices again for a longer period of time, or maybe they won't raise prices as much as they did last time. But other than certain things, like certain items, yeah, maybe the price will come down, right? They'll have a sale or something like that. But overall, in the big scheme of things, what's happened is the general price level of merchandise stuff has gone up drastically, and it's going to stay elevated regardless of what happens here. And this whole 0.2% beating expectations and all that stuff is it's a joke because I mean, yeah, people joke about how the CPI is understated anyway. But the crazy thing is that you start extrapolating these types of numbers. Long time ago, I had a chart that I think it was from the Wall Street Journal. I should have pulled it up, but it's a couple years old. But anyway, it showed like the inflation rate over like a generation, and so that's it's not the year over year inflation rate or this and that. It's the inflation rate over your lifespan, right? And so, I mean, back when my parents were a lot younger than I was, a new car was 2 or 3 grand. Now they're 20 or 30, and so kids being born today probably pay $200,000, $300,000, and so. Anyway, inflation is a monetary phenomena, and it's basically the Fed's fault, right? You guys know that I blame the Fed. And the funny thing is every time that I turn around and hear something or read something, the government is like spending more money on something. I mean, they just passed this Inflation Reduction Act, right? Which is kind of laughable because I think the CBO came out and said, I don't know if it was a CBO, but somebody came out and said that did a study that said basically doesn't have anything to do with inflation, but it's like this huge spending bill. It's kind of the macro picture is still sort of a disaster. So anyway, enough about inflation. We all know that inflation is bad, and the Fed created it, and now they're pretending to fight it, this and that. So, but anyway, the market reaction here is kind of interesting. there's this zone, right? There's this consolidation zone, and I saw something yesterday where somebody pointed out that there was like 8 days of consolidation here, and like 2, 4, 6, 8 days of consolidation here, and today, um, the funny thing is, last time, back in early June here, like 4,200 was practically a gimme, right? 4,200 was sort of the target everybody had in mind. We had this run up, the consolidation, and it stalled out, and then it tanked really quick based on, and I should have researched this because last week I mentioned this 3-day waterfall sell-off was based on Fed hawkishness, like something Powell said or Fed speak or whatever. And I think, as I recall, I can't remember everything, but anyway, that was kind of interesting. And so, we find ourselves in a similar sort of situation. On Monday, the market tried to poke out of this zone and didn't quite make it, sort of got turned back. And then today, like I said, we got that repricing, but I kind of get the feeling that the gap, there's not really, I mean, there's a gap from yesterday to today, but there's not really a gap from the high on Monday. So, um, and you can see this really tight consolidation and how tight yesterday's range was. This was an interesting sort of reaction here. I mean, like I said, the futures rallied 60 points right off the bat. You can see we're up about 63 right now. So let's see, the high, 41.98, which is interesting because, I mean, that's pretty darn close to the 4,200. Wouldn't surprise me to see sellers come in. Now it depends. I mean, you've seen recently, and we've seen like what they like to call short squeezes, right? Short squeezes, and so there's been a lot of short squeeze type action. You could see the same thing here. I mean, they could continue to squeeze this thing up. But, the longer term macro picture is not all that great. The Fed's definitely still going to raise, at least 50 basis points in September. And I'd be surprised if they stop there because, I mean, they've got to get that inflation rate down or all hell breaks loose, right? You can't run at an inflation rate like, I'm going to say over 5%. So there's still a long way to go there, but the market, temporarily liked what it saw. Although, if you ask me, 8.5% inflation is like completely unacceptable. So here we are. What I wanted to do here is, I guess what I want to do, I don't like doing this live, but I'm going to do it anyway, is draw that trend line, right? I got these weekly charts that have this trend line on it, and so there you go. This is a tremendous rally that we're seeing right here, and I'll tell you what this reminds me most of is, you guys know big on analogs and seeing patterns on the chart type of thing, and seeing this little pattern that we got going right here, very similar to what we saw back here towards the beginning of the year. Like, hard to explain. I guess I could draw some more trend lines or whatever. We had that sell off. Right. Yeah, well, that pullback and then this rally here in March, and then we've had, something similar right here. And we got a similar sort of rally going, right? And that rally in March, I pointed this out last week, how we got to this point here, and then we broke above these prior two highs, and it got really extended, and everybody sort of thought, well, it's gonna make a lower high here, and then it continued to sort of squeeze, and then you got that big up day there that would have stopped out any shorts, that were waiting for these two highs to get exceeded. And so, you might have something similar going on here. Whether it can rally up to this trend line or not, that's still a long way up. I mean, it's going to take some really good news. And earnings have been kind of so-so. That's the other thing, is everything's sort of based on earnings, and the earnings have not been all that great. I mean, a handful of big cap companies have done pretty well, but um, I mean, all the Nvidia was the big one, right? So anyway, before I bounce around to another chart, now that I've drawn all this stuff here, yeah, we got a similar rally to March, and there's no telling how high it pushes. I'd be surprised if we make a straight beeline for. I'd be surprised if we make a straight beeline for this trend line, but that's the major overhead resistance. Here we go. I'll just continue without saving that chart. So there's the weekly chart, and that's the big. There we go. Pull the scale up a little bit so you can see it. That's that same trend line, and look at this. I mean, we're working on. Well, last week was barely up, and this week looks like it's barely up, but we've had a pretty good rally off the lows. It's a little similar to this, and we'll see what happens here. And of course, this looks like it's on a log scale, but yeah, I don't know what is going on with these charts, but let me save that, and there we go. I'm getting a little bit better with these charts, and I've figured out a couple of things about them, but they're a little clunky compared to the good old days. But anyway, so hey, keep your eye on that. This market could squeeze up and tap that trend line. There's interestingly enough, I see a lot more bearish money managers on CNBC than back in the day. But there's some of the usual suspects are saying that the worst is over, and that everything's great from here. The market will be back at new highs before the end of the year. And hey, I mean, never doubt that the market can do whatever, because just crazy. What I wanted to look at was look at a few charts here. Let me go back to the daily. Here we go. Nvidia. Yeah. I mean, this was Nvidia. They came out and warned, which was not good. And let's see, Micron warned. Look at the peaks in these things. Let me make sure. Let me zoom out a little bit further. Nvidia, Micron. So the chip sector, and of course, yeah, look at that. Look at the peak in Nvidia, and where it is now seems a little concerning. Let's look at AMD here. Yeah, I mean, these stocks really, really, gave back a lot. And so I look at a lot of stocks, and I see some of the run-ups that happened generally in 2021, and that's maybe this thing's at fair value around $100, and maybe that run-up was just completely unwarranted. I don't know. I see that in a lot of stocks. So Coinbase just came out with earnings. They're talking about it now. There's a lot of this out there, right? Hot IPOs that IPO'd, in the past couple of years or whatever, and just basically, so it looks like the IPO price was $250, and then the first day of trading it went bananas, and then it's been all downhill pretty much so there, except for that. But yeah, I mean, some of these stocks, see Robinhood, there's another one. some of these may never recover back to their prior highs. So this was kind of an anomaly here this day, but there's a lot of these things out there. So basically, let's look at ARK, which I bring up each week as sort of a proxy for these type of momentum stocks. And quite frankly, I mean, a lot of them have had pretty good gains. They've been doing a lot better recently, and they've had some tremendous gains off of like lows. And percentage wise, it seems like a lot of individual stocks are a lot more volatile. When I look at them, I mean, these things are moving, 5, 10% or something, between 5 and 10% a day. Some of these momentum tech stocks, that type of thing. So, down from whatever that is, 160 down to 40 something, but this is an interesting. It's got sort of an interesting channel going on here, right? ARK does. It's got like a little. Well, there's the major trend line, right? So things are looking up a little bit. There's a series of higher lows, higher highs. See what happens if I try and draw a second trend. Yeah, there we go. Draw a second trend line. So when I look at that, I mean, the thing about rising channels like this is that when a stock recovers, if a stock has a bottoming pattern and recovers, usually you can kind of get like this rising channel thing, and there's every possibility that this forms like sort of a big cup, right? If these stocks continue to rally, but so, I'm not knocking this, but however, if that bottom trend line gets broken, right? So if it's kind of like a little bit of a bear flag. So look out below if see this is what drives me crazy about these charts. And part of it has to do with the show. Like, so here's the thing is that I guess it's just how they have to do their drawing tools or whatever. Maybe I can figure out a way to compensate for that. But every time I click on the drawing tools over on the left there, what happens is obviously it sort of skews the view on the show, which I guess it's not too bad, but so anyway, yeah, keep an eye on this. If ARK comes down and for whatever reason breaks below that trend line, then look out, right? And there was kind of, it was a little bit of there's been a couple of what I would call bear flags along the way, although this one was very pronounced because it's been going on since mid-June. So far so good. It's kind of right in the middle of it, and this is basically, a decent proxy for growth stocks, high momentum growth tech stocks, and see what happens with that. So let's see, Tesla is in the news. Elon, it came out, I think it was last night, that Elon Musk sold several $billion worth of his stock on this rally here, and that's has to do with his theoretical takeover at Twitter. It's an interesting chart there. So what I'm seeing is, and as you look around gazillions of charts, what you see is like a lot of stocks that they're still in downtrends, and they've had these sort of big rallies here lately. Kind of like let me just go to the SPY here. Yeah, big rally lately, still in a downtrend, and a lot of them are sort of pushed up against. They're pushed up against resistance. What was that one? Oh yeah, Shopify. This Shopify here. This is one that I pointed out last week that was pretty interesting, and it was interesting because of this basing pattern between 30 and 40. And so notice how it like kind of tried to break out here. It actually did. I mean, the highs these 4 days in a row were above these highs. Somewhere on here I've got Got a marked up chart of it, but this is still kind of interesting because um, this little sort of retrenchment that's underway right now. The fact that it broke out above these highs and now it's come back in a little bit makes it sort of interesting because now you kind of look for a higher low and then there's like whoops. See, that's the part that annoys me. So now there's another breakout level, right? And so this time, breakout over these highs. When you take a longer term view like that, it looks a little scary when you zoom in, but when you take a longer zoom out a little bit like this, you see that's that one heck of a bottoming pattern. And so this is kind of interesting. Okay, and so if you guys logged in this morning, you will notice that there's 2 new pending trades, and you log in, check those out. And now that we're kind of through the thick of earnings season, I expect that list is going to continue to grow, and then we'll have some open trades going finally. So this one here still, it's been pending for a while. It didn't quite make it up to trigger, and a lot of times, you see a pullback, you'll see the first rally, you'll see another pullback with a higher low, and then it's off to the races. And so this been pending for a while. This is it was a refiner, really. Integrated oil and gas refiner. Some of these, see, there's a few other ones. This one's kind of interesting too. MPC, it's got sort of, it's got a similar pattern, sort of cupping up. So that might be worth keeping an eye on. So some of these energy stocks, the price of oil's come down considerably, and so there we go. That was like sort of a super spike there. This, from just hit $100 and just super spiked to 130. Now we're sitting around 90. Watching oil is going to be kind of interesting going forward because this has a lot to do with that inflation rate, and so hopefully oil can stay below $100, right? I mean, prices at the pump have been coming down here, so that's good news. The last time I bought gas, it was, a dollar. It was a dollar less than the peak. Peaked here at 4.98, and now it's like, 3.89. It was 3.98, 3.89. So that's actually some positive news. But obviously the price is still way up, and so that just contributes to inflation because everything that you buy, most of the stuff anyway, has to be delivered. So there's lots of moving parts out there. Anyway, some of the energy stocks actually look interesting. We may see if I'm on a log chart. Oh, I'm not on a log chart. Good. I was looking at this one last night. This has got an interesting sort of potential cupping pattern here. Hey, when I see something like this, I look for like these sort of spike low sell-offs, and typically like the system likes to identify a stock that we're going to catch on the way up, right? So you'll notice that typically the entry price starts off quite a bit higher than the current price, and that's basically giving the chart time to sort of reset. Something like this, I mean, there may be another down leg on this that brings that brings it down towards that rising trend line there. I mean, quite frankly, you kind of want to see a good sort of base built here, right? Now you do see these U-turns, and we've seen a lot of stocks that they sort of rally up like this, and then they come out with earnings, and then boom. So let's see, earnings on this, that might have come out today. This is kind of a low volume one. See a few others off the top. Now here we go. This is I just randomly sort of pulled this one off my watch list. Here you got like sort of a cup and handle type of thing work, and so this is a more interesting pattern. But as I look around through these energy stocks, I think Buffett bought more Oxy here recently. This is kind of, I don't know what to make of this pattern because it just looks like a big sideways sort of, it almost looks like a sideways head and shoulders, right? Shoulder, shoulder. And so, I mean, there's so many energy stocks out there, and they all have like slightly different looks. ConocoPhillips doesn't look too bad here. And so, there's some sort of inverse head and shoulders type patterns building, and this one's got some potential too. I mean, this has got basically what you'd want to see is a little bit of sort of a retrenchment, a little backing and filling, and then and there's been some backing and filling, but spend a little time here, and then this has got some potential here. So I see a lot of potential in the energy space, and those are some of the better looking charts if you ask me. So let's look at real quick. Look at XLE here. Yeah, it's got a very similar pattern. The big sell down, sort of the spike low, rally, and a little bit of retrenching. So and of course everything's gonna kind of, these stocks trade, obviously as proxies for what the price of oil is doing. But at the same time, with the price of oil, even though it's come down some, may or may not go back up. It may stay around where it is. Still, with these elevated prices, and obviously, the aversion to, drill that's going on right now, these may do very well going in the future if oil prices, stay over, say, 80, going into the future. So anyway, so that's one of the sectors that I think looks pretty good. As opposed to like what we looked at, the semiconductors, right? Semiconductors have all warned, and so that's kind of, those charts don't look so great. So energy looks pretty good. I look at like materials and mining, and this is kind of I see a lot of these kind of charts, and you just sort of feel that it's extended right here. Like these rallies are extended. Could keep going, right? Look back over here, right? You had a similar rally, similar angle, a little bit of backing and filling, and then ripped higher. And so, there's every possibility that happens here. I could draw a trend line and say, well, whoops, that's so I keep that's one of the things about these charts that annoys me. But yeah, you could draw. There's a lot of charts out there you can draw trend lines on, and this recent rally has broken sort of the longer term trend line, but after, it just seems like this latest run off the lows is a little bit extended here. So best thing that could happen, I suppose, is a little bit of backing and filling, maybe. And there's a lot of these too where they have sort of that sort of thing, right? Like they formed the cup and they broke out over resistance. They've broken the downtrend line, and so now basically, if you got some little pullbacks and consolidations, then that would set things up for, potential swing trades. So with the macro picture, I wanted to look. FCX is an interesting chart. Let me make sure that this is, yeah, I just want to make sure it wasn't on a log chart. I mean, some of these mining stocks just absolutely destroyed on that move down, right, in a straight line, and they're starting to recover a little bit. Still below, I don't have the moving averages on here, but they're still significantly below the moving averages. I'm pretty sure that not that long ago, if I opened up the drawing tools, and just started to draw a trend line, it would appear, and like they changed something that now you actually have to select the drawing tool. That's why I keep making that mistake. So eventually I'll get the hang of it. Yeah, this is kind of interesting. Um, Same sort of thing as, we looked at whatever we just looked at a minute ago, XME or something like that. Had the had this very similar pattern here, except for it had already broken. It already. Actually, I'm just going to keep doing that until eventually, instinctively, I'd open the drawing tools and I'd go to draw a trend line. This could get kind of interesting over here. Um, One of the things in this sort of market is, the moving averages. Like there's so many stocks that are below, their 200-day moving average that still have pretty constructive patterns. So something like this, I mean, this stock is not in an uptrend. This stock's in a downtrend, obviously, but there's some potential here, right? I mean, maybe it got overdone to the downside, but I'm seeing a lot of bottoming patterns. So anyway, um, I could go through tons and tons and tons of stocks here, and a lot of them have similar patterns. A lot of them have already had run-ups, and so a couple new ones populating the pending list. Now that earnings season's winding down, my watch list over here in Thinkorswim looks like most of them, not all of them, but most of them have already released earnings. And basically, the next sort of little pullback in the overall market. Quick look at the Qs. We hadn't looked at yet. Yeah, the Qs have already sort of formed a little bit of a W, and they didn't even pause, which is kind of interesting. Didn't even pause at that consolidation. A couple of days here and broke above this area of resistance. Look at the Dow, the DIA. This has been consolidating sort of under. So all the indexes have a little bit different look to them. Russell 2000 broke over, prior resistance here in June. So, um, broken trend line over the middle part. And so things are starting to look a little bit more constructive, which is kind of surprising based on based on the macro picture. I mean, there's so much I'm not even going to get into it, but there's so much things that potential problems, out there in the macro world, but the market seems to be, taking it all in stride or whatever. And I saw a chart, retail investors are the ones that are buying this, like this latest leg here. So it remains to be seen. Best thing that could happen would be, something that would cause a little bit of a pullback. Because the more extended this current run goes, then I think the worse it might be. So, I'm keeping an open mind here. I'm sort of expecting something similar to, what happened in March, where you kind of run up until, every last, not every last, but until everyone's convinced that, the lows are in, the bear market's over. I think I've seen a few people declare the bear market over, the lows are in, and then some is even just bold to go out and say that, we're going to hit new highs before the end of the year and stick by their year-end price targets, which were, over these highs. So I'm a little bit more skeptical than that, just sort of given where we are. And so watch out for the rug pull is all I'm saying. Like, got to be careful. But in the meantime, there's still a lot of individual stocks that have some potential. So I see the market's getting ready to take another run at 4,200 here on the SPX. So 4,200, it's a big round number. Interesting. Did we already hit it this morning? I'm looking at the futures here. Maybe I get, well, no, it says 41.98. So 41.98. And so it looks to me on the like that the candle is hit 4200, but I guess there's a couple of invisible pixels there. So watch out for people getting sucked in here after the run, and then a reversal, right? And so that would be very similar to what happened back in March, right? As you went on this run, and it happened faster back there. This is a little bit different of a run. Similar, but a little bit different. You can see kind of this, the sell down, and then sort of the W pattern, and the little cups right here, and then it ran up, and it got to this point of resistance and pushed through it for like 1 or 2 days, and then that started this lower low. At this point here, like these couple of days here, these few days right at the end of March, nobody was expecting a lower low. Everyone was pretty much convinced that the worst of the sell-off is over. And same here. After that big, grueling sell-off, rally up here, a lot of participants were convinced the worst of it was over, and then that was just unbelievable, that waterfall sell-off. And so we're getting back to that area. I mean, maybe it'll what would be really wild, this is the last thing I'm going to point out, is, and let me just point something interesting out here. So, and this is going to be tough to draw on here, the way that so those two like peak points there, right? And these two peak points right here. I know now I got a lot of stuff drawn on here. So back here, like those two little sort of spike up peaks were like the big resistance level, right? And they kind of matched up. They just kind of stood up there, away from the price action. And so this is kind of similar. You got those two little peaks up there, and so running a little over time here. So these two little peaks, that'd be pretty good, sort of target up there that would kind of match up with this trend line, and so that's something to watch for. An upside target should the market, continue to rally here, but it's all smoke and mirrors, right? So it's all smoke and mirrors. The next pullback, I think, whatever causes it, or whatever the next pullback is going to probably present the best opportunity. So rather than chasing here, although like I said, there's certain charts that are set up sort of right here right now, but anything that's been on a run here for about a month-long straight run, I would wait for a reset, look more for bottoming patterns. So anyways, that's it for today. Hope you enjoyed it. I will see you here same time next week.